Hey traders, Nick here looking at FSR, Fisker. Starting with Hyliion, not to review Hyliion, just to remind investors or whoever's watching this to keep an open mind. I'm not a short, I'm not a bear. I've been accused of that when I was reviewing Hyliion, even though when I did the video in 2020, I said I was long, and because what I saw in the charts, lost 18, I said I would not try to catch this falling knife. It's going to, I said mathematically going to zero, but I said let's give it, say, single digits, and I got obliterated. So keep an open mind. I was not a bear. I'm not working for Wall Street. I have nothing to do with Wall Street. I'm on the West Coast. I'm an engineer who figured this stuff out on their own. So keep an open mind. Okay, FSR. Slightly different scenario than Hyliion. Less niche. So Hyliion is semis. This is at least a car you see on the road. So I've seen the ads pop up on Instagram, and I swiped to go check it out, and it's like $75,000. So I thought it looked something like a 40,000 range, 35, 45, 75. Okay, so nobody wants to make affordable cars anymore. Everything has to be, at least Tesla, you can probably get one for 45. With these guys, between this one and Lucid, I mean, they're great looking cars, but how about you make a car that people can buy, not the 1 and 2 percenters? Okay, let's go with the chart. Fundamentals, it's on you. It's still pre-production-ish, I think. I don't think they're selling. You pre-order stuff. But do your homework on that front. So let's just discuss the machines controlling the price action, because that's what the experts tell us, that the machines are in control of Wall Street these days. To a degree, makes them predictable. So let's look at the extremes. This is the period where it mattered, right? The summer of 2020, where the stock market went idiotic. And now we're paying the price, where it's being idiotic the other way and selling everything under the sun, the good and the bad. So clearly, 21-ish, 20 plus matters, and it's wrong. This is not my opinion. Look at the chart. Everything above that lasted all but a short time and then came crashing down. Like me, not meandered down, wrong. So everything above 20, don't be tempted. Okay, that's my opinion. If you're buying above 20, I think you're like committing the insanity thing where they say, hey, maybe this time it's different. This is the time it's going to go from 20 to 40 and stay there. Yeah. I'm being facetious. No, I shouldn't touch it anywhere near 20. That's where I close my wins. Even if you love it, if I made money from 14 to 20, thank you. I'm out. I'll buy you when you come down to 14 again, or 16 or 18 anyway. So even if my intention is to invest in the stock, when it goes from 14 to 20 in like a month, how much more do you need? I mean, this is way more than the average yearly return for all time. Just keep that in mind. Okay, so we established that above 20 is crazy wrong. And the market is telling you, based on what I'm looking at, anytime it's at around 11 or 10, it's wrong. They don't want to be there. So you buy into the 10s and 11s and you sell into the 20s. That's what this chart is telling me. It's very simple. Anywhere in the middle, nothing to do. So I'm going to give you 2 lines to watch for the next few weeks and a few comments around those. All right, this is a daily chart. I have not shown you any lines or drawings or anything. I don't even know if I have any. I do. They're not important. Okay, so if it comes up to 14, that's not the place to buy it. When it clears 14, convincingly, maybe, yes, it could go to 16 and a half. It could go to 17-ish, plus or minus. So let's see here. Oh, come on, go away. Yep, 17 and change. All right. So this is my estimate. If it breaks the prior fail, which is 14, it could get to 17. That's the upside target. Now, this is a big if. So I have an acronym. If you don't have an NTNT, if you don't have a reason, a trigger, a thesis, you shouldn't take a trade. That's me. I try not to take trades without an actual trigger or like a hidden secret. So if price comes up to here and I buy it here, I'm making a mistake, because I need to see, that's where they just sold it. So I'm going to assume they're going to sell it again. That's the safe assumption. If I'm wrong with that assumption, price goes up and then touches it for footing and then takes off. So that's how it goes. Like right here, it went up to here and then they came back to here and then they took off. So you don't buy it here, you buy it after they break out, and ideally touch it for footing and then they go. That's a proper breakout. So like this guy right there, whoever bought it here, if they exercised what I just said, they would have avoided this whole mess, because that's where they had just failed literally last, like a few days ago before, and then they bought into it. So that's how it works. And when you fall in, how far do you fall? That's also important. Right here, you can see that the bulls are in control for the last few days. They are trying to make headway inside this. See, look at my note. Try again long. See, I told you I'm not a bear. Resistance, that's where I put a line of resistance. I don't even remember when I did this. And look how that one candle went above it and then failed right back to it. That one candle we're talking about. So now I'm going to move my resistance line, since we've had this conversation, and I'm going to make it as okay, it is resistance, but if it does break out, you've got a fast trade up from there. Okay, so, and then I have a resistance zone. Why? Because this was a neckline from which they fell apart earlier. Okay, so let's talk about a few nuance. I started and then I got sidetracked. All right, so we established there's a buyer anywhere below 1050. Okay, and there is a seller at 14, and that seller is huge. Why? That orange line that's drawing itself here, I didn't draw this one. This one is volume. So all these bars down here tell you when the volume transaction happened. Not really useful. Okay, around what's with the two earnings? Okay, around earnings, there's a lot of volume, but how about tell me at what price that volume? Well, this is what this thing on. These bars on the left, they tell me the same thing, only they put it on the chart, like where it happened. And this orange line is the highest point, which means this is where bears and bulls love it. So when it comes back to it, they're going to very active. So if one is winning and the momentum is going up, and then it's going to hit a place where there's going to be more of both, it's going to be congestion. That's the resistance part. Overhead supply, whatever you want to call it. There's a lot of people that are going to be active. A lot of trading going on, so it's going to slow the pace down. So the bull's job is to maintain this ascending pattern. And these are not lines touching, by the way. These are just showing the behavior, that they're higher highs and higher lows. I'm not trying to pinpoint, okay, this line touches this. No, it's the behavior. Are they making progress? And will they continue to make progress once they hit that red line? Because that's where they failed before. So they're going sideways and up to see how they can hit that red line. I'm going to guess that without a headline, somewhere early March, that battle should come. Like the 8th, the 5th, I don't know, something like that. We'll see. It could come sooner on a headline. Market headline, specific to it headline, and then the breakout could be substantial, and I just told you where it could be ideally. They don't always go to the ideal target. Sometimes they undershoot, sometimes they overshoot, but if it gets there, I'm out. In fact, this line right here is going to be tough. So instead of saying, sorry about that, I got a new mouse, I can't get a handle it. Okay, so resistance zone, the whole area, there's going to be sellers. Everybody stuck here is going to be active selling it once it comes anywhere near it. I did that this week. I was stuck in a stock, and a rebound brought me back to even. Thank you. I'm out. Whoever chump took it off my hands, thank you. So that's what happens. If somebody's stuck up here and hurt bad, and then for some reason miracle comes and they are back to even, they tend to sell. So again, let's recap. Down here, whoever bought it, you're doing well. You're paying attention to charts, or you're just lucky good. So now monitor the progress, higher lows, higher highs. If you lose this, unknown risk. I'm not telling you it's going to zero. Mathematically it is, but not my message. Unknown downside risk. It could be $1, it could be $4. I don't know. Therefore, if I'm a trader or an investor, I should just get out and then re-engage with more information. So there's no reason why it goes below there. A market-wide crash, maybe. So know that losing this is not on my forecast, but losing this would be devastating. You're saying bullshit. I'm going to tell you one thing. Watch this, okay? It's not my rules. You have to play by the rules of the machines, right? Check it out. Okay, I drew this line right here. I didn't look left yet. Watch, I'm going to make the coordinates 0 on the left side. Watch where that line went. Look. You think it's a coincidence this happens? It's not. Okay? People are not that accurate. These are not people. People are not that accurate. Penny perfect. No. These are machines. So respect it. Below this one, I'll put a text. Below equals unknown risk. Could be $1, could be 50 cents, could be $5. Yeah, it could be $5. What did he just say? It could be $5. I don't know. That's the point of getting out. Why find out? Why find out? So this one worked. So if I bought it for a trade and I didn't exit here, you wish you had seen this video, because I would have told you that's a place where you start looking to exit. And then you engage lower. That's $2. $2 on a $14 stock. That's a sizable move. Okay. All right. So we have a floor that we want to avoid losing. We have progress that we want to continue having. We have a battle coming that we want to continue to win. And then we have a moment in time where we will make the decision to go to here or not. So if somebody buys it down here, viable trade / investment, doubles as both. Swing trade opportunity for the breakout, a decent entry based on the history. Hey, down here it's cheap, up here it's too expensive. Not value, stock price action. So now we have high volume area we know about. We have a ledge we know about. So now we're educated about the chart. And it didn't take much. I didn't use any. Did you see me use anything other than these volume bars? Volume. I didn't use Fibonacci, Ichimoku, MACD, nothing. I just use common logic, common sense. Hey, behavior. Up here, they fall. Down here, they rally. Somewhere in the middle where all the action's happening, therefore there's a battle coming. Did they report? They did. Okay, good. That's out of the way. So that's one question mark out of the way. I would love it in the comments if you would tell me something about it. Like they're going educate me. I don't have time to do homework on everything. So educate me. I can't do it here. Normally I would do my own homework. I'll just go into the financials, but there's nothing there because they're pre-production. I can't tell you statistics or anything. So if you tell me like, oh, okay, they're scheduled to go to market in so many months and they're going to produce whatever, that would be great. Debate it. If you disagree with what I just said, debate it. Otherwise, I'll try to get back to producing videos. I appreciate the membership. I can't believe I have so many subscribers. I know it's probably nothing compared to a Kardashian or something, but the time is very scarce these days because I do share my screens like you're seeing all day, every day now with the members. So that's eating up most of my time. All right, later.